So dear students, this is an excerpt from the CBSE publishings by the academic website of CBSE showing the distinction and classification of the financial markets. Under financial markets, you see students that we have got two categories. One is money market and the other is capital market. Money market, as you know, it's generally short term, and capital market is a long term market where there are sub two types of primary and secondary market, and in this market particularly there is trading of D or E, debt and equity that forms the capital structure of a company are both traded in both primary and secondary market of capital market, and there are also a few instruments in the money market. So let us see the distinction between the two types of market first, because this may also come as a one marker or maybe a difference, directly a difference between the markets. So here you are supposed to write, students, that the capital market and money market, as I told, the capital market is a short term market. Students, as far as participants are concerned from these two markets, the capital market involves individual investors as well as the institutional investors in the form of banks and corporate houses and maybe the foreign investors. But in money market specifically, there are investment from the large banks, commercial banks, the RBI, financial institutions, the mutual funds and big corporate houses. There are no individual players in the money market. As far as instruments are concerned, they are equity shares, preference shares and bonds and debentures, all are traded D and E. You can find here in the capital market. However, in the money market, there are specific instruments like CP, commercial paper, trade bills, the certificate of deposit CDs and trade bills. Then in case of duration is concerned, the capital market generally deals in long-term securities, that is for a period of more than 1 year. And if we talk about the money market instruments, they deal in short-term securities of less than within maximum tenure of 1 year. Then as the time period is more in case of capital market, the returns are also higher. However, in case of money market, there is lesser returns due to lesser risk and lesser time period. Now, as far as safety is concerned, this market is definitely, due to larger duration, it's more risky, and this comparatively for a shorter duration, and hence the almost it is very safe and less riskier as compared to the capital market. So this is all regarding the difference between capital and money market, students. And now the next important difference is between the primary market and the secondary market of capital markets of stock exchange, students. Now in the primary market, it is also called new issue market. This word is very important because the sale of securities is done directly by the companies in this type of a market. The new or maybe the existing companies, they come up and they ask the people, the general public, to apply for their shares. While in the secondary market, it's generally the exchange market or trading of existing securities only takes place here. There is no new issue in this type of market. Now, as far as securities are concerned, they are directly sold by the company in this, and here the exchange takes place between the investors, that one is buying or the other may be selling. Now, the flow of funds is here in this case from savers to the investors, because investors are the company and the savers are the households. So from there the funds goes to the investors. But here in this case, students, the secondary market, it is indirectly promoting the capital formation because the liquidity of shares are ensured in between the investors, the two investors, savers and savers. Now only buying of securities takes place because directly from the primary market we cannot sell off there, but here both buying and selling takes place in between the two investors. As far as prices are concerned, students, prices are determined by the company itself because they are the issuers of this security, and here the prices gets determined by the supply of demand forces. Supply demand forces of the market determines the price in this particular condition. There is no fixed geographical boundaries because, as you see, the companies are widespread, and here there are specified places where the investors are located and they sell off and conduct the trading of these securities. So I hope the differences are very clear. These functions of SEBI, students, have been a real attractor for the paper setters, and this question has come almost in every year in the recent past. So with this can easily be remembered as a Republic Day Parade, or RDP, where R represents the regulatory functions, D represents the developmental functions of SEBI, and P represents the protective functions. So let us now see that what all includes the regulatory functions of SEBI. Regulatory means registrations and regulations of the brokers in the market. Similarly, the mutual funds and other schemes, the regulation of the stockbrokers, the exchanges, the underwriters, the bankers, and all the intermediaries that are involved in this stock market. Then regulation also takes place of takeover bids by the companies, and sometimes the SEBI also conducts few inspections and audits in order to exercise its control and inquiries on the different intermediaries and the stock exchanges. It is also levying some charges for these purpose. So this also comes under levying of charges, is also a function of regulation under SEBI, and all the provisions of the Securities Contract Regulation Act 1956 are duly followed under this regulatory function of SEBI. Now as far as D is concerned, students, there are just 3 functions given under this, leading to development of the stock market. Development comes from training of the intermediaries. This is a major function in this segment. Then conducting the research work and then publishing the information for the market participants, and also undertaking all the measures to develop the capital markets and make it more flexible and more transparent as per the need of the hour. The last function being P for protective. In protective function, the SEBI exercises all controls to prohibit these fraudulent trade practices, which can be the price rigging, or we can say the manipulations in the statements, or the misleading informations by the companies. Similarly, controlling the insider trading, the practice of insider trading is also undertaken in this function of SEBI. Then the steps for consumer protection, because consumers are the vulnerable segment, and SEBI grants protection to all the customers and investors. Then promotion of fair trade practices is also taken following the proper code of conduct in the securities market. This is also governed under protective function of SEBI. So I hope you can remember the functions of SEBI as RDP: regulatory, protective and developmental. One more concept that has appeared in the past, student, is the function of stock exchange apart from the functions of SEBI. तो इसको याद रखने के लिए आप बहुत ही छोटी सी इंसिडेंट को याद रखें कि घर में खाना बनाऊं या SSC निकालूं. खाना बनाने के लिए लगता है LPG और एग्ज़ाम है SSC. सो देयर इज़ अ ट्रेड ऑफ कि खाना बनाएं या SSC पढ़कर SSC निकालें. सो LPG versus SSC, this is the acronym for learning the functions of stock exchange. Now as far as L is concerned, it promotes liquidity into the securities market. With liquidity we mean that the investors can reinvest and they can sell off and buy the new shares. So the continuity of the stock market goes. And then P represents the pricing of the securities. It is helpful in setting price that is ultimately set by the forces of demand and supply. And G represents the growth of the equity economy due to the presence of and contribution by the stock exchanges. Then SSC, in S, the first S represents the safety of the transactions, because nowadays it is all governed well by the legal framework of SEBI, and everything is very transparent and safe in the online market. Now again, another S represents the scope for speculation. Speculation activities, they are although it has to be governed and carried in a restricted manner under the provisions of the law, but it generally healthy speculations are promoted by this kind of a stock market. Then C represents the cult for equity. Cult means a trend or a fashion for investment into the by the public into these IPOs, initial public offers, and securities market. So whenever the question comes on functions of stock exchange, students, just remember LPG versus SSC. Thank you.